In the previous video, part 1, we learned how to create a company in QuickBooks. In this video, part 2, we are going to learn how to set up capital accounts in QuickBooks. These accounts are used to recognize owners' contribution or investments in QuickBooks. Let's get started. To create capital accounts, we need to navigate to Company File on the home page. To create a new account, we either need to come down here and click on Accounts and then choose New, or we could press Ctrl+N to open the New Account dialog. Owner's capital account are created under Equity. So we shall go on and click on Equity, then click Continue. We are going to set up 3 owners. Here we are assuming a sole trader or a partnership arrangement. We shall start by creating a parent account. For example, for John Peters Capital. Click Save and New. Then under John Peters Capital, we shall create a sub-account and call it John Peters Investment. This account needs to be made a sub of John Peters Capital. You do that by checking this box just besides sub-account and choose John Peters Capital. Click Save and New. We're going to create another account under John Peters Capital and call it John Peters Draws. Click on the sub-account button or check mark and choose John Peters Capital. Now John Peter is set up. Click Save and New. We're going to move on to Mary J Capital. This is the second owner. Click Save and New. Mary J Investment. Just like before, this goes under Mary J Capital. Click Save and New. Mary J Draws. Let's put this under Mary J Capital. Save and New. The last account we're going to create is for John Doe Capital. Save and New. John Doe Investment. We put this under John Doe Capital. Save and New. John Doe Draws. Put this under John Doe Capital. Save and close. Now, as you can see on our chart of account, we have set up 3 owners. That is John Doe Capital. Under John Doe Capital, we have John Doe Draws. John Doe Draws is a contra equity account, meaning that once money is drawn from the business, we are going to see a net, as you will see as we move through these videos. Then we have John Doe Investment. Down here, we have John Peters Capital, under which we have John Peter Draws and John Peter Investment. And lastly, we have Mary J Capital, under which we have Mary J Draws and Mary J Investment. Now, we also need to set up a bank account in order for us to recognize funds from these owners. I'll go on and press Ctrl+N. I'll choose Bank Account, click Continue. Equity Bank, save and close. Escape to close chart of accounts. Now, in order for us to recognize investment from these owners, we need to come here to Company and then go to Make Journal Entries. On this form, we are going to create debits and credits. We shall start by debiting Equity Bank. We could debit it at once, or we can debit it for each owner. To make things simpler, let's do it that way. So I will debit Equity Bank and credit John Doe Investment. Probably John Doe is introducing $20,000. Then we also credit by $20,000. I'll put, and you can put the date on which you're receiving the pay, that investment. In this case, I'm going to choose 1st September. I could put a memo here. Could say capital contribution from John Doe. These are the fields we can leave for now. Click Save and New. Now, before we proceed to the other owner, let's first check the balance sheet and see how that looks. You come here to Reports, Company and Financial, and go to Balance Sheet Standard. So as you can see, our balance sheet looks really neat. We can evidently see that money came into the business, and this money came from John Doe Investment. Now let's move on to the next investor or owner. That is John Peter. So I'm going to still debit Equity Bank and credit John Peter Investment. John Peter is bringing $70,000. Capital contribution from John Peter. This memo can be anything that makes sense to you. Save and New. Then we move on to Mary J. Still debiting Equity Bank. Then we call up Mary J. Investment. $150,000. Capital contribution from Mary J. Copy this and paste it on this line. Save and close. Now let's check the balance sheet again. Now you see how neat that looks. Under our equity, we notice that we've gotten money from John Doe, $20,000. We've got money from John Peter, $70,000. And we've got money from Mary J, $150,000. This totals up under our equity account to $240,000. So this is it for this part 2 video. In part 3, we're going to look at how these owners would take money from the business and how would record those transactions in QuickBooks. In case you have not subscribed to our channel, I invite you to subscribe, click the notification button so that whenever we post these videos, you get notified and you get to watch the video. Have a good day.